Stay informed on earnings trends and analysis in Zacks Earnings Outlook.
Second quarter earnings season is in full tilt right now, and to get a sense of what's going on, even though it is a bit early, our research director Shiraz Mian joins me here because he keeps his eye on all of the aggregate activity, right? So it is still early, even though we are in full gear, but so far, some of the big bank earnings positively surprised, although the results among some of the other companies that didn't come in so good might be keeping a little bit of a lid on any enthusiasm that's out there. But according to what you've written, next week apparently is the big telltale week, right? As far as how earnings season's shaping up.
Yeah, we'll get a much better sense of the aggregate picture. But what we have seen already gives us a pretty decent sense of how the picture will be. You pointed to banks. Yes, banks did surprisingly better. Relative to the fears getting into the earnings season. Estimates were getting cut as we approached the reporting cycle. There was the Brexit, there was the dollar, there was a whole bunch of global uncertainty. And a lot of the big banks did surprisingly better. Investment banking, particularly on the fixed income trading side, turned out to be much stronger. They had a lot of growth in their core loan portfolios, and which we are seeing in the regional banks too. So yes, it hasn't really been that good beyond finance, beyond the big banks, but we haven't really seen much. Yahoo and IBM and Netflix, they don't really you can't really read through much from those reports into the broader landscape. We had good numbers from Microsoft. We have good numbers from Johnson & Johnson. Parts of IBM numbers were good too. So on the whole, I think it's been a decent start.
All right, so we're sitting here talking on July the 20th. As far as the positives out there, right? Had the bar been set way too low anyway going into this earnings season so that any positive surprise seemed like a stellar surprise?
That's always the big question, and I thought there was the case getting into the earnings season, though at this stage, when I look at the magnitude of surprises, the ratio at which companies are coming out with bottom and top line beats, it's not outsized. So it's kind of within the historical range. It could change, as we mentioned earlier. The next week is a really flood of earnings reports. But at least at this stage, from what we have seen, doesn't confirm that statement that the bar was so low that anyone could jump through it, even you and I could do it. So it may have been just right.
Okay, so run down the scorecard for what's come in so far.
Okay, so we have, as of today, 70 S&P 500 companies have reported results.
Okay.
That's 14% of the index's membership. 20.7% of the index's total market cap. So a lot of these are banks, these are huge entities.
Yep.
So about a fifth of the index's market cap has already reported results, which is not a small sample. Total earnings are down 5.2%. Total revenues are up 1.1%. 70% are beating EPS estimates, and 55.7% are beating revenue estimates. And we have 16 sectors, as we keep reminding folks. A number of these sectors in the second column, which shows the total market cap, you could see that finance, technology, aerospace, transportation, we have sizable sample sizes already, so one could kind of draw inferences about the broader universe as well.
Sure.
The next slide compares the results from these 70 members, index members, and compares those with what we had seen historically from that same 70 S&P 500 members. And the left-hand side shows the earnings and revenue growth rates. The right-hand side shows the proportion of companies beating estimates. Growth, there's nothing much to talk about. As you remember, Q2 is on track to be the 5th quarter in a row of negative earnings growth. So nobody's surprised that earnings are down. The right-hand side chart, which compares surprises, goes on to the earlier point you were raising about the bar being too low. So you will see that 70% companies are beating EPS estimates.
Okay.
That's about in line with historical level. In fact, the 4-quarter average for these companies is 73.6%. The 12-quarter average is 70.5%. Similarly, on the revenue side, so the proportion of companies coming out with positive surprises is about in line with historical levels, which tells you that perhaps estimates were not low enough. Otherwise, these proportions would be much higher.
I see.
And the next slide shows us the summary picture, combining the 70 that have reported with estimates for the still to come 430, and total earnings for the Q2 Q2 quarter are expected to be down 4.3% on 0.5% lower revenues. So Q2 is still on track to be the 5th quarter in a row of earnings declines for the index.
Do you have any sense at this point of what company guidance, what story that's going to tell?
You know, the trend has been negative, meaning that when companies report one quarter's results, Q2 in this case, they'll provide some color on the current period, which is the September or Q3 for us now. And the trend has historically been negative. They'll kind of set expectations, bring them down a notch so that they could easily beat them, which is that long-standing game of anchoring expectations at a level that they could easily beat. So the trend is negative, and I would expect that trend to continue. The question is, how much negative?
Right.
And I have a slide here which shows the earnings growth expectations for the S&P 500 for the coming few quarters. And as you would see, that for the September quarter, the index is currently expected to show an earnings decline of 0.9%. So the trend of earnings declines, which is the 5th for Q2, is expected to continue into Q3. If we go further deeper into negative territory as the earnings season further progresses in the coming days, then it'll show that the earnings picture isn't really improving as many people have been banking on.
So if we continue to see earnings surprising as we move through the Q2 season, is that going to help fuel the rally in stocks a little bit more?
So a lot will depend to the extent that earnings are driving stocks, and they surely do in the long run, though in the short run the market can move for a variety of other reasons. The Fed is the biggest driver, and I think that still is the biggest driver right now. But folks are expecting a material improvement in the earnings picture later in the year, which then continues into 2017. Even on this slide, you will see that Q4 is expected to be positive, and then Q1 17 and Q2 17 are very strong. So we are not geared for seeing that a material improvement in the Q2 earnings cycle, but we should start seeing fewer negative revisions to the Q3 expectations. And if we start seeing that, that'll confirm for the market bulls that yes, that the current estimates for Q4 and beyond, they should have more confidence in. And to that extent, it should help support the current positive trend in the stock market. Yes.
So then, am I hearing correctly? No reason to expect that the Q2 earnings are going to end up outpacing expectations.
Well, they always outpace expectations.
Okay.
In the sense that in any normal, quote unquote, normal quarter, 2/3 of the index members would beat EPS estimates.
Okay.
2/3 is a large number.
Yeah.
So 2/3 come ahead of expectations. So one could reasonably say that on average they beat expectations. I think the key factor will be the extent to which Q3 and Q4 estimates will come down, meaning the second half estimates will come down as companies report and share their guidance with us. If those estimates start coming down a lot or above average pace, or even in the range of what we have been seeing over the last 3 to 4 quarters, there'll be a net negative as far as the verdict on Q2 is concerned.
All right. Well, we know you're always there to keep us up to date on what's going on through the earnings season and beyond, for that matter. But in the meantime, in between these video updates, you can always go to Zacks.com for Shiraz's written earnings outlook commentary. It's all there for you. Link to it right off the homepage. With Shiraz, I'm Terry Ruffalo.